PY Uncut, Apple stock, riding the tech titans roller coaster. Introduction. Welcome to PY Uncut, the podcast where we slice through the noise of the financial markets to deliver sharp, actionable insights for investors. I'm your host, and today we're diving into the world of Apple Inc., the tech behemoth whose stock, ticker Apple, remains a cornerstone of portfolios worldwide. Apple's market cap, hovering around $3.2 trillion, makes it one of the most valuable companies on the planet, and its stock is a bellwether for both the tech sector and the broader market. Whether you're a long-term investor, a day trader, or just curious about where this iconic company is headed, Apple stock offers a fascinating case study in innovation, resilience, and market dynamics. In this episode, we'll unpack the latest developments driving Apple's performance, analyze its financial health, and explore what the future holds for this Silicon Valley giant. So let's get started. Latest developments. Apple's stock has been making headlines, and as of May 12, 2025, it's trading at approximately $198.34, down about 21% from its year-to-date high of $259.85 on December 26, 2024. Despite this pullback, Apple surged nearly 6% at market open today, fueled by a significant easing of U.S.-China trade tensions. Over the weekend, the U.S. and China agreed to a 90-day tariff pause and a reduction of reciprocal tariffs from 125% to 10%, a move that directly benefits Apple, which relies heavily on Chinese manufacturing. This deal, though temporary, has calmed investor nerves, as tariffs have been a persistent overhang for Apple's supply chain costs. Another headline grabbing attention is Apple's reported plan to raise iPhone prices for its fall 2025 lineup, according to the Wall Street Journal. Unlike past price hikes, Apple is keen to avoid linking these increases to U.S. tariffs, signaling a strategic move to protect brand perception while offsetting higher production costs. Posts on X reflect this buzz, with some users noting Apple shares jumped 7% in pre-market trading on this news, though we must treat such posts as inconclusive without verified data. On the legal front, Apple is appealing a U.S. judge's ruling that found the company in contempt for failing to comply with a 2021 injunction in its antitrust battle with Epic Games. The April 30, 2025 decision ordered Apple to open its App Store to more competition, potentially threatening its lucrative 30% commission structure. This ongoing saga underscores the regulatory pressures Apple faces, which could impact its services revenue stream. Apple's recent earnings report for its fiscal second quarter ending March 29, 2025, also provides fresh context. The company posted quarterly revenue of $95.4 billion, up 5% year-over-year, with diluted earnings per share, EPS, of $1.65, an 8% increase. Services revenue, including Apple Music, iCloud, and Apple Pay, grew 12% to $26.65 billion, just shy of analyst expectations of $26.71 billion. CEO Tim Cook highlighted double-digit services growth and the launch of the iPhone 16e, new Macs, and iPads powered by Apple Silicon. However, Cook warned during the earnings call that current tariffs could increase costs by $900 million in the quarter ending June 2025, a concern that lingers despite the tariff reprieve. Analysis. Let's break down Apple's stock performance and what's driving it. At $198.34, Apple is trading at a forward price-to-earnings PE ratio of about 28, above the S&P 500 average of 22, but below high-growth tech peers like NVIDIA. Its price-to-sales ratio is 8.2, reflecting a premium valuation driven by Apple's brand strength and ecosystem lock-in. The stock's 50-day simple moving average, SMA, is around $210, and the 200-day SMA is near $220, indicating a bearish tilt in technical indicators, with 16 of 26 signals pointing downward as of May 12, 2025. The Relative Strength Index, RSI, is neutral, suggesting neither overbought nor oversold conditions. Apple's financials remain robust. The company generated $24 billion in operating cash flow last quarter and returned $29 billion to shareholders through dividends and buybacks. Its board approved a $100 billion share repurchase program and raised the dividend by 4% to 26 cents per share, payable today, May 12, 2025. With a payout ratio of just 15%, Apple has ample room to increase dividends, appealing to income-focused investors. However, the dividend yield of 0.5% is modest compared to the S&P 500's 1.5%. The tariff situation is a critical factor. Apple manufactures roughly 90% of its products in China, though CEO Tim Cook noted that most iPhones sold in the U.S. this quarter will come from India, with iPads, Macs, and Apple Watches primarily from Vietnam. This diversification mitigates some tariff risks, but a potential re-escalation of trade tensions after the 90-day pause could pressure margins. Wedbush analyst Daniel Ives, maintaining an outperform rating with a $325 price target, argues that Apple is entering a multi-year AI-driven iPhone upgrade cycle, which he believes is undervalued by the market. Conversely, analyst Edison Lee's downgrade to quote, underperform cites concerns over tariff costs and slowing innovation. Services growth is a bright spot, contributing over 25% of revenue and offering higher margins than hardware. The App Store, Apple Pay, and subscription services like Apple TV Plus are sticky, recurring revenue streams that cushion hardware cyclicality. However, regulatory challenges like the Epic Games ruling and EU laws forcing App Store changes could erode this moat. Apple's decision to scrap Project Titan, its self-driving car initiative, also raises questions about its ability to enter new product categories, though redirecting those resources to AI and services may prove prudent. Market sentiment is mixed. The TipRanks consensus from 29 analysts gives Apple a moderate buy rating, with an average 12-month price target of $228.65, implying 15.17% upside. Price targets range from $170.62 to $300, reflecting divergent views on Apple's growth prospects. The stock's performance has lagged the broader market, with a year-to-date return of minus 20.8% versus the S&P 500's 8.1%. Yet, Apple's history of resilience surviving 50% drawdowns and an 81% peak-to-trough decline suggests it's not to be underestimated. Future outlook. Looking ahead, Apple's trajectory hinges on several factors. The U.S.-China tariff talks, set to resume in 90 days, will be pivotal. A longer-term trade deal could stabilize Apple's supply chain and boost investor confidence, potentially pushing Apple toward the $225 to $230 range by year-end, as forecasted by Coin Price Forecast and Traders Union. However, a breakdown in negotiations could reignite volatility, with some analysts predicting a drop to $190 or lower. The iPhone price hike, if executed, will test Apple's pricing power. With inflation and cost of living pressures squeezing consumers, higher prices could dampen demand, particularly in emerging markets like India and South America, where Apple's growth strategy relies on installment plans and market penetration. Conversely, an AI-driven iPhone upgrade cycle, as Ives predicts, could drive sales, especially if Apple integrates advanced AI chips into its devices. Reports from Bloomberg suggest Apple is developing chips for AI servers and smart glasses, signaling a push into new growth areas. Regulatory risks loom large. The Epic Games appeal, EU App Store regulations, and potential U.S. antitrust scrutiny could force Apple to rethink its services model, impacting margins. On the innovation front, the Murderbot series premiere on Apple TV Plus this week and rumored AI-powered Safari updates show Apple's commitment to content and software differentiation. However, competition from Alphabet, Meta, and Chinese manufacturers like Huawei could challenge Apple's market share, particularly in China, where it's scrambling to regain ground. Analysts project Apple's revenue to reach $415 billion in fiscal 2025, with EPS of $7.40. Services revenue is expected to grow 12 to 15% annually, potentially hitting $180-200 billion by 2030. Long-term forecasts are bullish, with StockScan predicting Apple at $300 by 2030 and Exeler Resources estimating $611 to $653. Bearish scenarios, however, warn of stagnation if Apple fails to innovate or navigate regulatory and trade headwinds, with prices potentially dipping to $180 to $220 by 2030. Conclusion: Apple's stock is at a crossroads. The tariff reprieve and potential iPhone price hikes have sparked a near-term rally. But challenges like regulatory pressures, trade uncertainties, and innovation hurdles keep investors on edge. Apple's financial strength, with $24 billion in cash flow and a $100 billion buyback program, provides a safety net, while its services growth and AI ambitions offer upside potential. Yet, at a forward PE of 28 and a 20.8% year-to-date loss, Apple isn't the invincible juggernaut it once was. For investors, the key is balancing Apple's proven resilience with the risks of a maturing market and geopolitical volatility. As we head into the second half of 2025, keep an eye on trade talks, iPhone sales, and regulatory developments. They'll shape whether Apple reclaims its highs or faces tougher times. Thanks for tuning in to PY Uncut. Until next time, stay sharp and invest wisely.